One of the biggest mistakes I made in my early trading career was simply chasing trades. I'd see a move already in progress and think, I can still catch it. 9 times out of 10, I'd enter late, get stopped out, and watch price go exactly where I thought it would go, just without me. When I stopped chasing, my trading completely changed. Now I wait for the market to come to my level, I look for liquidity to build, for price to take it, and for structure to shift in my direction. If that doesn't happen, then I simply don't trade. It's that simple. The results, more patience, fewer losses, and way more consistent profits month after month. Now this week alone, I took 3 trades. Now 2 hit targets for over 3R each, and the third was simply a small win. In this video, I'm going to share the shift in mindset and the exact waiting game I play that keeps me consistent, so you can see how trading less can actually make you more money. Now if you've been over trading or entering too late, this might be the change you need. This strategy super simple, and if you wanted to replicate it, you can do exactly that. So let's get straight into the breakdown. It's traded on GBP JPY, the 5-minute time frame, and our time window is actually from 7 a.m. all the way to 10 a.m. UK time. So if you go to the bottom right of your chart and you just easily search for London UTC +1, as you can see London, then you'll be able to find the perfect strategy. But yeah, so let's get straight into this. So if we just come here like this, boom, as you can see, now the model I like to follow is the market structure shift liquidity sweep model. It's very common and it can be replicated very easily. It can be traded multiple times a day. It's not limited whatsoever. So as you can see, just like this, we'll have a model just like this. Boom. So let me just fix that. Boom. So as you can see, what this model would show, the first thing we would actually be able to identify is a market structure shift. Because if we don't have the market structure shift, we can't really look for a liquidity sweep or rejection of the height. So as you can see right here, we do have a market structure shift right here. And you can see how we have a liquidity sweep that aligns with that market structure shift here. And then you can see we have the rejection of the high here. So what I mean by the rejection of the high is you can see this candle, it failed to get above it. So we know once this happens, it's going to then distribute a market structure shift. The next candle that comes, as long as it doesn't break above it, is good, but usually it doesn't. And then what's going to happen is going to tap into a order block that's resting at these levels of price action, as you can see right here. So the order block is resting right there, and we just have our short position like this. We can aim for about a 8 pip stop loss, and then we just target 1 to 2 on our stop loss. Very easy. Yeah, so if you guys do watch all the way to the end of this video, you'll be able to pass your very own funded challenge. And again, if you guys want us to pass and manage your funded challenge guaranteed to help you get a payout, just click the first link in the description and we'll show you exactly how we can help you do that. But let's get straight into this video. So as you can see, we come to our trading time just like this. Boom, boom, boom. We let price do whatever it wants. If price wants to go up, it can most certainly go up. If price wants to go down, price can, go down. So the first thing we want to do is identify a market structure shift on the 5-minute time frame. As you can see how we had this MSS come and just take out all of the structure here. So once we identify that, we can also follow it up with a liquidity sweep. So now we want to look for the 5-minute order block, which is right within here. And yes, we're going to take it from the wick of the candle as well. As you can see, we could just go like a short position right here. Put your stop loss at 8 pips, and that's just above the high, which is perfect. So now for take profits, what I usually do is target a 1 to 2 risk to reward ratio every single time. But again, if there are liquidity points you can reach towards the downside, then you can definitely go for that, just like this. Boom, boom, boom. As you can see, 3 liquidity points. So what happens, price then retraces into our entry point just like that, as you can see, and then it ends up breaking our take profit level, and it does end up going much lower to about a 3.7 R. It does end up even going much lower to maybe a 1 to 5, 1 to 6, as you can see right there, as I was saying. So yeah, if you guys do follow this correctly, you can make tons and tons of profit. As you can see, it does use the area as another entry level. So the area was validated twice. So it wasn't just used once, but it was used 2 times before it actually had a complete reversal. So let's get into the next example. It's super easy, and I want you guys to try this out for yourself and just show me your guys examples. You can do this on a demo trade or a live account, whichever you're confident in using. So again, we're going to do the exact same thing here. We're just going to wait for price to form a market structure shift. As you can see right here, we have price forming a market structure shift just like this. What we can then do is identify where the liquidity sweep could have taken place. So you can see we have a liquidity sweep here. We have a liquidity sweep here at the pre-session, which caused all of this distribution to go towards the upside. So as you can see, we have our 5 minutes order block right within here. We could wait for price to then retrace into that, just like that. So as you can see, price retraced into our order block. So we could go for a long position. We could have about 8 pips on our stop loss, and we can just target 1 to 2. There aren't much liquidity points where we can target, so we could just use this as a final take profit, which is about 1 to 2.71, but initially we're looking at 1 to 2, and as you can see, it does end up hitting that take profit level really nicely. Again, this is 2 back-to-back trades, so this is Monday, this is Tuesday. Now let's get into the final trade. So if you do trade it correctly, you'll be able to take multiple trades in a week. Boom. So as you can see, we come to our next trading time, which is right about here. Boom. So as you can see, what we usually do, again, as always, we wait for price to then have a market structure shift, which is the first thing we want to see. Boom. So as you can see, price did end up having a market structure shift, which is perfect because that's what we need to actually make an entry, correct? So as you can see, we can enter off of this 5-minute order block, which is resting right here. Again, we're going to take it from the wick of the candle. That's completely fine. What we'll do, we'll put our stop loss just below the low, just to make sure we have within the 8 pip range. And there's our 1 to 2 on the risk to reward ratio. As you can see, we do have liquidity points where we can be targeting, so we can have a higher take profit if it aligns. And as you can see, we do end up hitting that higher take profit. So yeah, it's pretty simple. Hope you guys did enjoy this video. Don't forget to like, comment, subscribe, and I'll see you guys in the next one.